Why should people earn money on day one of the month, yet have to wait until the end of the month to receive the money they've rightfully earned, while 60% of the workforce are actually using some form of high-cost credit monthly to get through to payday? What we do is we fix that problem by giving people access to their earned pay, only ever their earned pay. It's never a loan. Give them access to their own pay so they can control their finances.
Welcome to the Payroll Podcast with your host, Nick Day. Find out what it takes to truly discover what it takes to elevate your career within payroll as we meet with the industry leaders who are shaping the industry for tomorrow.
Hello and welcome back to the Payroll Podcast. My name, of course, is Nick Day. I'm CEO of JGA Recruitment, a specialist payroll recruitment firm. And I'm also the host of the world's first Payroll Podcast, which is where you find me right now. You can, of course, find the Payroll Podcast on iTunes, Spotify, and all of your favourite podcast channels. It's also available on our very own website, jjrecruitment.com. And please, if you haven't done so already, please share it with your payroll friends. Hit the subscribe option so you never miss a future episode. And if you're feeling super generous and you love the show, please leave us a review. So today I bring you James Herbert, who is the founder and CEO of Hastee, which is a revolutionary fintech business that drives financial health and productivity by enabling employees to choose when they receive their earned pay. And this is a hot topic within the payroll industry at the moment, so I can't wait to dive into this in a little bit more detail. Hastee's earnings on demand platform provides financial education and management tools, as well as rewards and benefits via the Hastee Card. Now, this is the world's first debit card that gives people dynamic access to their wages as they earn. Now, with 2/3 of UK workers affected by personal finance-related stress in 2020, which of course have been exacerbated by the pandemic we found ourselves in, and with less than 1 in 5 businesses offering a financial wellbeing program to combat these challenges, and with pay-on-demand services being a hot topic as we've mentioned, I thought this would be a great time to welcome James to the show. So James, how are you feeling? And welcome to the Payroll Podcast.
Hi, Nick. Thank you for having me. Looking forward to having a good chat.
Let's go back a little bit before we get into the nitty-gritty of financial wellness and pay-on-demand services, which is going to take up most of the conversation today. I wondered if you could provide us with your own outlook on the impact of coronavirus on workers and, of course, ultimately payroll in a way that you've seen it change.
Yes, well, COVID-19 has been an incredibly polarizing effect on the workforce, with 41% of the employees taking on more debt, while a reduction in the number of people that are actually experiencing financial stress in the workforce has reduced from 82 last year to just 66% this year. So the impact is not consistent throughout the workforce, but is affecting certain groups, such as the 18 to 24-year-olds, who have been most severely affected by it, greater than those that perhaps have more of their income spent, which would normally be spent on commuting to work.
Sure, that makes sense. Because I know that the pandemic's obviously changed things around in terms of where we're spending money. We've noticed that with the impact on things like hospitality, but we've also seen other businesses really excel, the likes of Amazon, as people sit at home and consumer spending in those kind of areas has increased. So overall then, you mentioned there's been a 41% more debt taken on. Is that predominantly then within that 18 to 24 age bracket, or is that a statistic that goes wider than that?
It does go wider than that, but the 18 to 24-year-old age bracket has taken on, 57% of them have taken on more debt during this time. What we've also seen is those that are more reliant on high-cost credit have been forced into it even further. So while, as I mentioned, 66% of the employees now are relying on some form of high-cost credit, experiencing financial stress on a regular basis, that is actually down from a higher number last year, where we had 82% experiencing financial stress and related to high-cost credit. But the most worrying factor for me that has come out of 2019 to 2020, and obviously COVID being the huge factor in this, is that we've seen a big increase of those people that are applying for financial credit, doing so knowing that they're going to struggle with repayment. There is a massive liquidity problem where people are applying for high-cost credit, knowing they're not going to be able to pay it back. And the 20% increase in people going through that to 59% of people that are applying for high-cost credit, doing so knowing they will struggle with repayment. It's a massive problem facing the work.
Wow, I had no idea it was so high. It seems crazy that the figures are so high. Well, let's take it then on to pay on demand services, which I mentioned in the introduction. It is a hot topic for payroll professionals right now. Despite it being talked about, there was a recent CIPP members survey, which within that survey, I think it was 413 payroll professionals were surveyed, and only 12% believed that pay on demand services were an attractive benefit for the workforce. So I think that's down to a bit of a lack of understanding about what pay on demand services are seeking to achieve. And I wondered then if you could help explain the benefits from your perspective of the pay on demand solution, and of course of Hastee and the solution that you offer, and how you're really set up to help rather than hinder businesses with the solution.
Absolutely. So the old phrase, cash is king, and that applies to organizations as well as to human beings. It's a matter of balancing your incoming with your outgoing to match the payments with your expenses. And what's really interesting actually is it's actually only the 60th year anniversary after which there was legislation passed by the UK government to allow people to be paid monthly. Prior to that, it was actually illegal for companies to pay people monthly. Yet in that time period, we have been institutionalized around a monthly pay cycle, whereas the wave of technology is now providing people with on-demand access for almost everything. We control our entire lives through our smartphone. So the two things have sort of diverged and been increasingly divergent over time. People have been finding it very difficult to manage their cash flow, their liquidity. Now, what on-demand pay does or on-demand earnings is it gives people the choice, the control over when they receive their earned pay. Why should people earn money on day one of the month, yet have to wait until the end of the month to receive the money they've rightfully earned, while 60% of the workforce are actually using some form of high-cost credit monthly to get through to payday? What we do is we fix that problem by giving people access to their earned pay, only ever their earned pay. It's never a loan. Give them access to their own pay so they can control their finances. And we layer financial education and management tools on top of that to give them better understanding and provide the opportunity for them to make better decisions and control their finances better, ultimately driving improved financial health of the workforce, which in turn improves the productivity of their organizations.
That makes sense. And I guess the idea then is to reduce the impact that these high cost loans are having, because if you're getting money on, not say on demand, but as you earn it, then you're not going, these individuals, you say, it's gone up massively. They're not going to need to continue to apply to some of these very high interest related loans if they've got access to money a little bit quicker. That's kind of how it works.
Yeah. So there's a number of really interesting things as well that go beyond just the access to high cost loans. But actually the impact it's having on the human behavior elements to it, the productivity elements to it. If you think about it, we're still hunter-gatherers, and that's not going to change for centuries, millennia. The idea of getting out of bed and going hunting and gathering on day one and not eating until day 30 is totally alien to us. But actually, if you Hastee and other on-demand pay products, we're able to better link effort to reward. What we're trying to do is we're trying to make it frictionless from getting out of bed and going to work, putting that effort, being able to use the fruits of that labor to manage your financial lives, to save, consume, and invest frictionlessly. And linking effort and reward is really, really powerful in driving productive behaviors. So what we're seeing as well is we reduce absenteeism. People are focusing better at work. Companies are reducing their churn as a result and seeing greater employee engagement. So by introducing earnings on demand and giving people control over their finances, it's helping the people, their employees, be better financially prepared, more financially healthy, driving their productivity. And obviously, you drive the productivity of your workforce, that's going to have very positive knock-on effects on the productivity of your organization.
And presumably there's going to be an additional benefit. I know that your background is also in recruitment at Bright Sparks, which is a much bigger firm than mine, but you're used to this in terms of, one of the key metrics we look at as recruiters when we're trying to find top talent is we want to find talent that's going to be retained by that business. So presumably if that's a solution that you're providing where a competitor may not be, or if employees are liking this service, I'm assuming from your perspective you're seeing some good improvements in things like metrics like retention. Would that be correct, or have you done any analysis on that side?
Yeah, we have. I mean, I think it's quite interesting just sort of crystallize it with the background there. So this is a solution that I came up with, that sort of 15-year overnight idea, the light bulb moment, having faced this problem running Bright Sparks. It's employed about 20,000 people now working within events and hospitality, and it's predominantly employing students and part-time staff and recent graduates to do so. And if you take an example of although it was obviously cancelled this year, but take Royal Ascot, the big famous race event that happens every year. And a lot of the students are going to go and work for that company, Bright Sparks at that point, and having just finished their final year, their finals exams for the year, and spent all of their student loans, been out partying and ready to earn some money for the summer, for the next year, et cetera, et cetera. They're due to work from Tuesday to Saturday because it's a 5-day event. And, let's say they're going to earn £100 a day. Problem is, by Friday, a number of them are phoning up saying, I really want to work, but actually I can't afford the train fare to get there. They're in what I call the cash trap. So, if they had £20 to pay for their train fare, they could earn 200. And the irony, of course, is that they've earned money Tuesday, Wednesday, Thursday. They just can't access that until the end of the following week, which is already too long. They're maxed out on their credit cards. They're maxed out on their overdraft. They simply haven't got another way of getting there. Now, that is not just a negative for them. It's negative for the organization because they're losing that great, all of that human capital, all of that talent that aren't able to turn up. And it's also a negative for the race goers because by the time you've got to Friday, people have built up a real repertoire in the bars and the restaurants and the hospitality areas, and they really know what they're doing, and the service is improved and everything else. And suddenly by losing that consistency of staff, it affects the end user as well. So it's a negative for all people. As a lot of people within this audience will know, particularly if they are involved in recruitment businesses, that there are options like invoice factoring out there for organizations. Now, I kind of thought, well, why can't people do that? Johnny, who's worked Tuesday, Wednesday, Thursday, use the money that they've earned Tuesday, Wednesday, Thursday before it's practical or possible to really pay them, to be able to get to work Friday, Saturday, and then earn more, which benefits all parties. So that was kind of where the idea came from. And we've absolutely seen that hypothesis play out with, a number of different businesses that we're working with, particularly in the shift workforce, are saying that their Hastee users are, signing up to well over 20% more shifts. The surveys we've done ourselves are showing that 77% of people with Hastee are happier and more engaged at work than they were prior to having on-demand pay as an option.
They sound really good statistics. I guess one of the things that I know is going to be on some of the listeners' minds as they listen to this is, on the other side of the coin, is there a risk that if you give employees access to their money earlier, they're at higher risk of spending it sooner, and therefore when the end of the month comes, they're so used to that cycle, they've got those bigger payments they have to pay. It might be a mortgage, it might be their rent, it might be some of those larger payments which it's absolutely necessary that they have higher sums of finance to potentially available at the end of that month. If they're able to take it on demand, does that leave them short later? Does that actually impact the financial wealth negatively? Now, I know I'm sort of playing devil's advocate with it here, but I know it's a question that a lot of the payroll community are having as to whether could it also have the adverse effects. So I'd love to find out a little bit more about how the solution works, how it integrates with payroll in that respect, and whether or not you've seen any of those negative potential outcomes, or are we just misunderstanding how the solution is actually operates in real life?
It's a very good question, Nick, and it's one that we do come across regularly, as you can imagine. We simply aren't seeing that. It's simply not the case. To give you an idea, the usage of our app is really, really interesting. So our average user is withdrawing funds, roughly £70, 4 times a month, once a week. But they're in our app 1.3 times a day. So they're using it to much better understand their finances and to better manage their incomings and their outgoings around what it is they're actually earning. And it's providing a really close link between that and reward. And as a result of that, people are becoming much better in control of their finances and is reducing their need for relying on high-cost credit. Because you've got to remember, a lot of people are in their overdraft. They're relying on credit cards. They're using buy now, pay later, et cetera, throughout the month because they don't have another option. Just because they're not getting access to their pay doesn't mean that those expenses and those demands on their income have gone away. And very often they come with higher costs. They're not able to manage their funds as a result. They don't have control over what it is, over how they're spending. So, just because one go went bust doesn't mean that suddenly everyone's cash flow problems are solved. In fact, what's really worrying and terrifying is that people are actually under more financial stresses because of the demise of the payday lenders. Now, I'm totally behind that. They were predatory lenders and we can't allow them in society, but it's important to find another product. We're the exact opposite of a payday lender, but we solve the cash flow, the liquidity problem to help users. And by giving people the ability to balance that effort with the rewards to manage their finances throughout the month, is proving to be very, very positive on how they manage their funds, how they pay down expensive credit, And they absolutely have better understanding and save money for those vital required expenses at the end of the month, or more importantly, whenever they occur during the month, which tends to be the case in the modern world.
That's certainly crystallized it in my mind to be quite a clear example as to how it can be a real benefit, and why hopefully those negative, I guess sometimes ideas don't necessarily come to fruition, because as you say, they're accessing the money anyway, they're just accessing it through different means which actually come with a cost. So I think that's a really interesting way of looking at it.
The crazy thing, which we think about it here as well, is that the workforce is the biggest provider of working capital to the organizations. I mean, if you're just looking at SMEs alone, forget the large companies, but UK SMEs, the workforce is providing roughly £35 billion of working capital to their companies, their employers, every single month. In the fact that being paid at the beginning of the month, by not being paid until the end of the month for the work that you've earned throughout that month, that is providing them with working capital. Yeah, the company is quite happy effectively borrowing from their employees. It's just a psyche that people have forgotten. To put that into scale, there's only £9 billion of business overdraft in the SME market in the UK. So 35 billion is a big number being provided by the workforce. And it's purely since 1960 that this has been the case. Before that, it had to be paid weekly.
It's clear we've got used to a monthly pay cycle. That's the reality. It's what we've all come to know and love. And change is always going to be met with resistance, because we've got used to managing things in a certain way. But at the same time, we've seen pay on demand solutions come into play in Australia. We've seen them come into play in the US, and they're being adopted very quickly, and or have already been adopted in those areas of the world. So I have no doubt we're going to see the same trend happening in the UK. And I can tell from the conversations we've had so far, you're obviously very good on your statistics and your data. I'm assuming you've done some analysis on the impact that liquidity has on mental well-being as well. And we're seeing mental health being a really hot topic at the minute, particularly with the pandemic having an effect on individuals' mental health in terms of anxiety and working from home and isolation. Have you seen the liquidity aspect impact mental health from your side of things?
Liquidity is one of the biggest causes of financial stress. And financial stress is one of the biggest causes of poor mental health. So financial stress, it creates poor mental health in 75% of cases of poor mental health. So the link is enormous. When particularly looking at the work we've done, we tend to focus on the workforce rather than the wider consumer, because that's our target audience and the one that we know more about. But 2/3 of the workforce is experiencing financial stress at the moment, 2020. As I mentioned, that's actually down from previous years, which is interesting, but there's polarization. But it's having a significant impact on that demographic, on those people. With 28% of the workforce, 28% of employees, their sleep is affected. 13% are saying they're not able to concentrate at work, and a whopping 7% are actually off sick as a result of financial stress caused by not having the liquidity to manage their finances. It is a really big problem, and a really big problem that has considerable cost for the organizations. Yet, despite that, only 18% of companies are, as you mentioned earlier in the show, actually have any financial well-being programs at all.
It's definitely an issue. I'd like to think that companies now, are starting to address the well-being programs. I think we're seeing a lot of activity where companies are starting to address it in different ways, and I think financial health, obviously, as you made a very clear case for, there has to be right at the top of those wellness agendas. So I think that's interesting. From your perspective, then, are there any sort of Hastee success stories, case studies you can tell us about that really demonstrate where those benefits have been experienced for anyone that's listening to this perhaps still isn't convinced?
We have all sorts of different types of users, as you can imagine. We work with the NHS, we work in hospitality, we're working with security, we're working within technology businesses, and across all demographics. I think what's really interesting as well is that this is the whole workforce that are affected by liquidity, that need cash flow. And one of the big things that we have that's, I think, probably causing slower adoption in the UK is the good old British stiff upper lip. People don't want to talk about their problems. They certainly don't want to talk about their financial problems, and they want to talk about their financial problems with their employer even less. There's a massive stigma around. And that's something, we've got as a society overcome. I do think we are moving in the right direction with the greater awareness of mental health issues, with the greater awareness of the link between financial stress and poor mental health, and so on and so forth. But actually, when we were looking at the information, the studies, the feedback we've got, our independent study found that, 52% of people are more likely to stay at an organization that offers earnings on demand. But actually, if you're looking at smaller demographics, the highest retention rate, or people are more likely to stay with the organization, is 18 to 24-year-olds, which I guess you would expect. 75%. But actually, the next biggest group is those earning between 75 and 100,000 pounds a year. And they wanted only just slightly, 1% less. 74% of people earning between 75 and 100 grand a year are more likely to stay with an organization offering flexible pay solutions. Now, a lot of people don't think about that. They've got probably more options available to them. They might have better credit, therefore they can really load up their credit cards. Often they're the ones that are applying for payday loans because they get past the community able to do so. They are in that bracket of 59%. In fact, actually even more of that demographic are applying for high cost credit, knowing that they're going to struggle with repayments. They might have assets. They could have a mortgage to pay. They've got school fees, et cetera, et cetera. Cash is really, really tight. And people like that often the liquidity is so important. And, you start thinking about it from a company's point of view. It's not just your variable staff who perhaps, are higher churn anyway, but actually really, high managerial staff and people in senior roles that would be very difficult to replace are affected by this. And obviously, if their productivity is affected individually, that's a big cost to productivity of the organization.
Sure, that makes absolute sense. So let's bring it back then we talked about wellness a lot today, and I want to link that to payroll, because personally I think that the demand for hybrid skills, and obviously you've got a recruitment background as well, so I'd definitely be interested in your take on this, James, but the demand for hybrid skills is growing within the payroll community as far as I see things as a payroll recruiter. And I think that's because, the interrelated collaboration between payroll, reward, wellness, performance, all those kind of areas is definitely increasing. It's causing payroll to be more holistic as a function. With this in mind, from your perspective, where do you think the responsibility for employee wellness really sits? Do you think that wellness should fall under the responsibility of payroll? And how much influence, I guess, do you think that these kind of solutions, for them to be implemented, for them to be brought in, how much of that responsibility, rather, do you think should sit within a payroll function or a payroll leader?
I think what sits exactly with payroll and what sits in other parts of the organisation is probably up for debate. I think it's in the same way that the more generalist, more hybrid approach is happening within particular departments such as payroll. I think that's happening across the board, and we have to adapt to what's around us. Particularly as more tools come in to help with the mundane, repeatable tasks, so we can automate those. That actually helps all people within the organisation to be able to put their head above the parapet and look at a range of different things and try and add more value in the ways that humans really can. And I absolutely feel there is a really crucial role for organisations to support their workforce. We're in a really privileged position where we can have a massive positive impact on the people we employ. And we can do that because of a number of different features. And one of those features is, trust. And one of the reasons that employees trust their employer is because they pay them when they say they're going to. And obviously, as soon as you mess up payroll, which is why payroll is such an important task to get right, as soon as you mess up payroll, you break that trust. But trust is a really important thing. So when payroll or the organization that's driving it comes to the employee base and says, hey, look, we know that stuff is hard out there. We know everyone's got their own trials. They've got their own particular set of circumstances, but we're going to just put it out there. We're going to give you some access to this, but we're also going to try and, encourage you to consume that financial education, look into those financial tools, put some savings aside, put all this together and try and make your financial lives better. That's massive in sort of bringing to the surface and creating that engagement with the workforce. But also, because of the trust you have and the engagement you have, people are much more likely to consume that information, that are much more likely to benefit from it than they would if it was not linked to their workforce. So, yeah, I do think whether it's, where the decision happens in the organization, I certainly think that as employers, we have a responsibility to look after our workforce, but equally not to control our workforce. So telling them when they can and can't receive and when they repay and when they can and can't do something, the vast majority of our workforce are able to vote, yet we're not allowing them to choose how they control their money. Seems a bit crazy to me. So we need to respect our workforce, our employees. We need to give them the tools to put them in control, to learn, to evolve, to educate themselves and to better manage and control their financial lives.
Yeah, no, well, I totally agree, and I think we've talked about a few things today, including retention. I think one way we can really raise the profile of payroll is to develop the concept that payroll as a function can be profitable, and that profit can be seen in many ways. And one of those is offering solutions that improves employee engagement, that improves financial wellness, that therefore improves overall retention. All of those things have a value that are very can absolutely have an impact on a company's bottom line. And I think from that perspective, pay on demand could be a pivotal solution for a lot of payroll managers who do want us to look at their payroll departments with that kind of mindset. So that's one of the reasons I definitely think it's here to stay. I definitely can see it accelerating over the coming months, and obviously Hastee offer a great solution from that side. But one thing I know that payroll managers are going to be asking now is from a compliance and integration perspective, how easy is it to integrate Hastee into your payroll process, if you like? And are there any compliant issues you need to consider in terms of how people are getting paid, in terms of the payslip process, for example? How does it work? How does it integrate?
Yeah, I mean, you're totally right on adding value, and we're in a great position where all departments can, and with more metrics around it, payroll teams can say, hey, look at this, we are now a profit center because we're driving this productivity within the organization through the engagement and productivity of our workforce. So totally behind that, and the more we can do to support people across the payroll market, provide that and prove their worth, the better. With regards to integrating, look, it's super easy. As you mentioned before, I built this off the back of my, the idea came from my experience of high turnover, contingency labour force, and payroll people weekly, et cetera, et cetera. It is designed to sync very, very seamlessly with people's payroll. It sits on payroll. We do not interfere with it. A lot of companies, obviously rightly so, almost see payroll as sort of a national security issue. They want to keep control of it for that very reason. If they mess up payroll, it's a disaster, and they'll totally break their trust and engagement with their workforce. What Hastee does is we have a relationship with the employer, and then when the employer invites or they announce it to their workforce, they're going to offer it. We then invite their workforce to sign up. That forms a tri-party relationship, and effectively what happens is we provide the technology that enables us to know who is earning how much and when they're going to pay. The principles based on 3 criteria: identity, who is earning, who is working for who, and who owes who income; time, when are they working and when will they otherwise be paid; and value, how much are they earning over that period of time. So our technology knows that, and our technology makes everything work behind the scenes, so we know how much people are earning in real time and enable them to draw it down. Then at the point of payroll, the company runs its payroll as normal. We feed into the payroll process the deductions, so how much people have already received from their earned pay in that month. The worker receives their pay minus what we've already provided to them, and the company pays us what we've already given them of their pay. So the mechanics of it are an increased frequency of pay. It's never alone, and we provide the funding to the organization, so it doesn't affect company cash flow at all, with the company paying us on the day they would otherwise have paid their staff.
Have you ever asked yourself, how can I recruit payroll staff effectively? Please don't give up on your recruitment project just yet. Here at JGA Payroll Recruitment, we appreciate the difficulties associated with attracting, recruiting, and retaining top payroll talent. We also understand just how costly a poor payroll hire can be. JGA Recruitment are a niche payroll recruitment agency who will partner with you to resource payroll candidates who will improve both the accuracy and efficiency of your payroll department. Contact us today on 01727 800 377 or visit jgarecruitment.com to find out more.
So where's the cost element here? Do employees pay a cost each time they make an early claim towards their pay, or is there a cost from the employer's side? Where are the commercials that are behind this?
Yeah, sure. So we have a very simple charging structure. The first withdrawal everyone makes, up to £100 every month, is completely free. No one's charged anything for that. And then after that, for every withdrawal that's made via our app, it's a 2.5% transaction fee. So if someone takes out £100, it's going to cost them £2.50. So at the end of the month, if Johnny has taken £100 at the end of week 1, £100 at the end of week 2, they're going to receive their pay minus £102.50, and the company will pay us £102.50. Now, we do have a handful of our customers that are forward-thinking enough that they actually fund this on behalf of their workers. But the vast majority pass that cost on. And then on top of that, we've just launching a card, which you correctly mentioned right at the beginning of the podcast. So we've working with Visa, formed a partnership with Visa, whereby we've launched the world's first card that gives people instant access to their earnings. With that, there is a membership option as well as an on-demand option. And people are also benefiting from cashbacks and rewards on their purchases, which can actually be greater than the cost of the purchase in the first place. So again, some really powerful dynamics on that. So people can effectively make money out of using Hastee. So not only are people getting out of bed and going to work and being more productive at work, hopefully making them and their employees earn more money, but beyond that, we're making their money go further, as well as giving them the cash flow to better manage and control their income. It's a sort of a win-win-win situation.
Great. Well, it sounds incredibly innovative. If I'm a payroll manager now and I'm thinking, okay, this sounds great, I want to introduce it into my payroll department, where can our listeners find out more about Hastee, James?
Best place is to go to our website, www.hastee.com, or our LinkedIn page, and that's HASTEE. So hastee.com. with 2 E's.
Fantastic. And I will, of course, put a link in the episode notes, in the show notes, to both of those pages. I'll also put a link to James' LinkedIn profile as well. If you have any additional questions that I haven't covered today, but you're desperate to ask before going ahead, those details on there as well. So you can reach out to James and ask further questions. But certainly, it's been a really informative call. It's been a question that a lot of questions I'm getting at the minute from the payroll community is about this pay on demand service. How does it work? And it sounds really exciting that you've actually taken it a level further with the card and that relationship with Visa and that cashback options. So it sounds really exciting, sounds really innovative. Do go to hastee.com, that's HASTEE.com if you want to find out more. And remember, I should say as well, if you do have a payroll related vacancy and you're listening to this and going, actually, I want someone to implement this, but I don't know where to go because I'm so stressed trying to get the UK payroll done at the same time. I need someone in on an interim basis to help me. Then, of course, you can give me a call as well as a specialist payroll recruiter. You can get me at nick@jjrecruitment.com or give me a call 01727 800 377. Just leaves me to say thank you, James, ever so much for joining me today on the Payroll Podcast. It's been a really interesting and fascinating conversation about a subject area that I certainly didn't know enough about. So thank you for that. Thank you for explaining it in such great detail. I think some of those stats are something that we can all take away to understand and show how we can really use pay on demand solutions to improve that employee engagement experience. So thank you for joining me today.
Nick, thank you very much for having me. And actually, if you mentioned the stats, our study is available online as well. So if people are stat junkies and want to have a look at that, a bit of bedtime reading, they'll find it there as well.
Excellent. Well, I'll try and put some additional links to those stats as well. We all like a stat when we work in payroll, right? It's a number-based game, so I'm sure there'll be lots of interest in those. Thanks again for listening, folks. I look forward to bringing you the next episode of the Payroll Podcast real soon. Take care of yourselves and each other.
Thank you so much for tuning into the Payroll Podcast with Nick Day of JGA Recruitment. If you need help with a current payroll vacancy, then please get in touch with Nick and his team. All contact details can be found in the episode notes. In the meantime, to make sure you never miss a future episode, please subscribe to the show through any of your favourite podcast channels. Till next time.